One stock just cracked today's top 5 for June 30th. AT&T got hit hard today, down 5.13%, and it's printing at levels last seen in March. The important read, RSI is at 28.32, which is oversold territory, meaning the stock has been sold so aggressively that a statistical bounce is mathematically likely, but LOW conviction means the underlying business weakness could crush any rebound. Volume spiked to 2.96 times average, signaling institutional selling, not panic. We're breaking down whether T is a tactical bounce or a trap. Price closed at $20.70 with the structure broken below both moving averages. MA50 is $24.31, MA200 is $25.47, a 15% gap above current price, meaning the tape is in a downtrend. Support at $20.57 held today, but if that breaks on volume, $19.56 is next, a 5.4% haircut from here. Upside resistance sits at $24.71. A 4.5% move that requires confirmation. For low conviction trades, that's thin margin for error. The daily close matters more today. Hold above $20.57, and a bounce is on the table. Break it, and we roll deeper. RSI at 28.32 is oversold. That's the technical signal that short-term reversal is statistically probable, but oversold doesn't mean buy here. It means expect volatility. Buyers often get fooled buying oversold in downtrends. The moving average picture amplifies the risk. Both MA50 and MA200 are overhead, trending down together, and the gap between them is compressing, which is a warning sign that momentum is rolling over into a deeper decline. Volume confirms institutional intent. 2.96 times average on a down day tells us big money was exiting, not accumulating dips. That's the disconnect. Technicals say bounces do, but fundamentals and volume say sellers are in control. Today's sector weakness: Verizon flagged for Dow removal, and BT venture costs matters because AT&T faces the same headwinds. Legacy wireline revenue is in secular decline. 5G build-out is capital-intensive with unclear ROI, and the balance sheet carries leverage that limits dividend flexibility if rates climb. No earnings catalyst visible near term. This is why conviction is LOW. The stock is getting sold for structural, not technical, reasons. A bounce might last 2-3 days, but if those headwinds persist, sellers return. The risk isn't sudden panic, it's slow institutional rotation out of the sector. Put-to-call ratio is 0.935, nearly balanced, meaning for every dollar bet on T falling, roughly $1.20 bets it rises, which signals smart money is genuinely split, exactly matching our LOW conviction call. Implied volatility at 0.3906 sits in the 14th percentile of history. Options are near their cheapest ever on this stock, which means call spreads or long calls here are unusually affordable insurance on a bounce, but also signal the market expects minimal directional conviction. Entry zone $20.57, $20.70 with stop at $19.56 gives us 2.38 reward to risk. If we hit first target $23.41, acceptable but not compelling for low confidence trades. Watch down with LOW conviction means we lean negative but lack conviction to swing heavy. If you own T, this isn't a sell signal, it's a monitor for breaks. If you're considering entry, the oversold technical setup is real, but the fundamental weight is too heavy to back aggressively right now. Watch for either a clean break below $20.57 on heavy volume sells off harder, or a move back above $24.71 on institutional buying reversal confirmed. Until one of those happens, size small, take half off at $23.41, and let the second half run to $24. The asymmetry isn't there yet to go all in. AT&T is a textbook gray zone. Technical setup screaming bounce meets fundamental headwind screaming sell. Oversold rebounds are real, but sector rotation out of telecom is real too. The options market priced in the confusion cheap, Roman 4 and balanced. Puts/calls mean professionals expect a coin flip outcome over the next week. If T bounces, targets are stair-stepped at $23.41, $24, and $31 for those with higher conviction. If it breaks $20.57, the next leg down starts. Watch the next 5 trading days for a clear direction catalyst. Subscribe for more deep dives on stocks caught between technical and fundamental tides.